Good morning, everyone. Hope all of you and your families are safe. Q3 FY22 witnessed a spike in overall cases with surge in Omicron variant globally. The quarter performance reflected
Can increase voice, Subbu.
Yeah. The quarter performance reflected some of the impact on our business performance in select businesses. We will now discuss the results for the third quarter of fiscal year FY22 declared by the company. We'll be discussing ex-natural numbers throughout the call. For Q3, the company registered a revenue of rupees 6,002 crores, an increase of 1% quarter-on-quarter. The EBITDA before Forex and other income declined by 20.6% year-on-year to 1,016 crores. EBITDA margin for the quarter was at 16.9%. Net profit decreased by 22% year-on-year to rupees 604 crores. In terms of the business breakdown, formulation business in Q3 witnessed a decline of 3.3 quarter-on-quarter to 4,992 crores and contributed around 83% of the total revenue. API business contributed around 17% and clocked a revenue of 1,010 crores for the quarter, registering a strong growth of 48% on a year-on-year basis, led by improved demand for some of our key products. For the quarter, the revenue from US formulation decreased by 4.4% year-on-year to rupees 2,745 crores. On a constant currency basis, US revenue decreased by 5.9% year-on-year basis to $367 million. We have received final approval of 4 ANDAs and launched 7 products in the quarter under review. We have filed 10 ANDAs, including 3 injectables during the quarter. In addition, we filed 1 505(b)(2) NDA with the US FDA. The total number of filings end of December is 719. Revenue of Aurobindo Pharma USA, the company marketing oral products in USA, decreased by 5% year-on-year for the quarter. Revenue of Aromatics injectable business decreased by 7% year-on-year to 63.2 million for the quarter. We have total 165 injectable ANDA filings as on 31st December 21, out of which 108 has received final approval and the balance 57 are under review or have tentative approval. The company as on 31st December 21 has filed 719 ANDAs filed with US FDA on a cumulative basis, out of which 494 have final approval and 30 having tentative approval, including 8 ANDAs which are tentatively approved under PEP4 and the balance 195 ANDAs are under review. For the quarter, Euro formulation revenue clocked at 1,694 crores, an increase of 1.4% year-on-year growth. For the quarter, growth market witnessed a growth of 2.8% quarter-on-quarter to rupees 397 crores. For the quarter, ARV formulation registered a modest 7.4% growth quarter-on-quarter at rupees 155.7 crores, a degrowth of 64.9% Y-on-Y on a high base of last year. R&D expenditure is at 393 crores during the quarter, which is 6.6% of the revenue. The average raw material cost increased by about 4% during the quarter and the freight cost more than 20% quarter-on-quarter. Net organic capex for the quarter is around $52 million. The average forex rate was 74.82 in Q3 FY21, rupees 73.94 in September 21 and 73.68 in June 21. The average finance cost is at 0.7 mainly due to availing multiple currency loan. The business generated a free cash flow of $201 during this quarter, which is highest. Net working capital for the quarter has been reduced by $137 million, mainly due to the reduction in the inventory, and we continue to make further progress on this front. Inventory alone we have reduced by $100 million and $175 million for the quarter and year respectively. As a result of the strong cash flow generated during the quarter, the net cash position, including the investments at the end December 21, improved to $211 million. The gross debt is $499 million, and we have been reducing the gross debt quarter-on-quarter, and we will continue to do so. This is all from our end, and we are happy to take your questions now.
Thank you Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may raise the hand from the bottom of your screen. Once your name has been announced, you will be unmuted and you can ask the questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Once your name has been announced, please introduce your firm and your name and then ask a question. First question is from Mr. Tarang Agarwal.
Hello, sir. Good morning, good evening. This is Tarang from Old Bridge Capital. So two questions. Firstly, on the US business, if I look at the operating profitability hit versus the corresponding period last year, it's almost entirely on account of gross margins coming off, a sharp decline. Can you give us a more granular sense as to what all drove this? Was it what kind of price in key raw materials, the kind of price erosion that you might have perhaps witnessed at the marketplace? And, were there any failure to supply penalties, any provisions that are reflecting in the raw material cost? And how should we see this going forward from here on?
Subbu, you are telling?
Yeah, you carry on, sir, please.
No, the US we sure that this quarter there is a reduced cost of goods also are increased because we have sent our manufacturing costs are increased because of input material and services cost and everything, and the sale also has come down some extent as we hope it is a one-off a thing, and naturally the margins because of the and quarter on quarter the price falls, and we last 3-4 quarters are fallen, and we have seen very much less in this quarter, but in the previous quarters there is no penalty we paid. We paid hardly 1 million out of 300 out of 250 million sale or something like. And penalty is not much, very minimal. We have enough stocks of 2.75 months, including the pipeline. So that this time, because of input material, always our transfer from India cost is high. So that is the reason the profitabilities are come down, and we are hoping we are touched the bottom. Things will improve from now onwards.
Got it. So basically what I understand is it's a function of both erosion at the marketplace and input costs as far as
our transfer itself from India went into higher price, so naturally there is a less profits.
Correct. Sir, you've purchased about $34 million of ANDAs this quarter. If you could give us some insight in terms of, the significance of these purchases. And if I see the first 9 months, it's almost at about $150 million now. So do we anticipate more purchases in which direction, therapeutic areas of this be?
No. We are not going to purchase anything because we got where we don't have the ANDAs, which is not under development or under approved list. So whatever we don't have, we bought the company. Even you develop those products that will cost more than that. This is only the either CB30 or the change of API PAS that we are working very aggressively. It is a total 40 products. Out of that, 31 is the orals, and 4 are injectables, or 3 are dermatology. So like that, whatever we don't have, only we got it because it came in a reasonable price, because so we bought it for the strengthening of our portfolio. Other than that, there is no reason. Previous also we have done like that. Wherever we don't have in portfolio, we feel that is required by the sales team, we will definitely make it. We'll buy, but I don't think in next 1 or 2 years we are almost majority of the generic formulation we are there. Oral side.
Got it. I have a couple of more questions. I'll join back the queue. Thank you.
Thank you. Next question is from Manpuria Neha.
Yeah, thank you so much. This is Neha Manpuria from Bank of America. Subbu, just to clarify on the gross margin, if I understand the skew, because of the API growth would have also impacted margins. So if you could just give a breakup in terms of the impact on gross margin because of US price erosion versus raw material cost versus the higher sales of API.
Yeah, Neha. Yes, there is a change in the product mix during the quarter, and because of the mix, the impact on the gross margin is about 1.25%. Out of the total 3% and odd, 1.25% comes out. The balance is contributed both by raw material cost and the price erosion. Price erosion for the quarter is not very big. It's this one, but overall, if you really see the year as a whole, there is a significant price erosion. So that is the thing. So out of the 3% gap which you have been talking, 3 to 3.5% gap which you are talking, around 1.25% comes out of the product mix.
Understood. And I didn't really understand your comment that price erosion in the quarter was not significant, because if I were to look at the oral solid business quarter on quarter, it seems to have come down about $34-35 million.
No, definitely the price erosion are happened. In the last 3 quarters, all quarters together itself, including shelf stock adjustment of around 10-11 million because of price erosion. So almost 45 million or something happened in this one. It means approximately 9% of in this nine months. And we are pretty sure we are seeing last 1 month or something. There is no much pricing reduction request or not.
It's a cumulative impact which the chairman is
cumulative impact.
So the cumulative impact is roughly about 9% in the 9 months, you're saying?
Yes,
absolutely. Okay. And sir, you mentioned that in the last 1 month, you have not seen any more requests for price revision. Is it fair to assume?
We have not got any request for reduce the price for the ROFR. It will be called, right
Yes.
of first refusal. We have not received anything.
Okay, so is it fair to assume, sir, that we've hit the bottom in terms of the sharp
Yes.
price increase we'd seen because of inventory stocking?
In the normal products, other than the niche products,
yes,
I fair to expect this is the bottom.
Understood. And sir, therefore, going forward, how should we look at the growth for the oral solid business? Sorry, sir, go ahead.
Continue, ma'am. That is the only question?
Yes, sir.
Now, the future is very clear. The going down is very fast. Nobody can stop it. Going up is a very, very slow process. It will take 3 years' time or something. Improve the existing products' prices. And adding the additional orders of the existing products, adding our so-called 200, 225 products of the new products. This is the area we will slowly, both sides, we want to improve a little bit. That is our goal in the oral side. I am talking oral side. In the injectable side, in 1 or 2, Yugandhar can tell, except in 1 or 2 antibiotic injectable. So there is no much reduction in this 9 months.
Understood. And so my last question on, there's an announcement about, Aurobindo exploring foray into domestic market. Can you give some color on the thought process on that, and what would be the strategy here? Would we look at, organic, inorganic opportunities?
Yeah, now this is the time we feel we have the cash flow, and we may get another 200-300 million. We will get additional cash flow in the next 4 or 5 quarters. So this is the time we want to go to the either branded or OTC and all 3 together, the complete, because things are changing in the branded formulation. People are not going multiple thousands of reps. That Jamana is slowly going. So this is the time we want to go organic and inorganic within 1 year. From the day we start the first inorganic, then we want to reach in 3 years around 1,000 crore sale is our goal, either organic or inorganic.
Understood. Thank you so much, sir.
Thank you. We request participants to limit your questions to 2 at a time. Thank you. And next question is from Mr. Deepak Gupta.
Hi, good morning, sir. Thank you for taking my question. I'm Deepak from Nippon Life Insurance. Sir, first question is if you could give us some update on US FDA inspection status for all your key plants.
No, as on today, we have 3 audits. Unit 1, which is already Nityanand can tell, it is already warning letter 1. Again, they given the repeat observation warning letter that we already we are in discussion with FDA, and we have a good advisors, and we will try to resolve in next 1 year. And the major issue has come in the where we have the in US plant. The US plant, which is a very small sale, it is a 2.5 million, already loss making. We ourselves are thinking to stop that plant. So that we had the warning letter. That again audit has come there. Also because it is a 68-year-old building. Some leakages. There also we may expect some warning letter. Anyhow, we are not interested to that plant. We are moving to the new. There only we bought the new model, brand new model. We are shifting that from there. That we are already doing that process. Unfortunately, they came in the meantime. That wise. So these 2. The third one, which we have Nityanand Reddy, Unit 5. Now the audit is going on in Unit 5 API, sterile API is going on.
Sure, sir. Can you just give us an update on Unit 4 and UGA? Any inspection due over there?
Take it.
Yeah,
it is. Yeah. So it is all the injectable plants. Obviously, like as you know, we have for last 2 years, FDA has not done any audit. So all our units are obviously due for inspection, and we are all the time we are ready to get inspected. But all the plants are due for inspection. I think across the world, across all companies, that's the same status. So it is no different for Aurobindo.
That is a good answer. You need not ask me about Aurobindo. You ask everybody. The audit is due.
Sure, I understand, sir. And sir, the last question is, I missed the opening remarks. You may have addressed it, but there have been obviously a lot of media articles talking about the fact that you're looking for investors in your injectable business. If you could give us some perspective, what exactly the thought process of the injectable business. Thank you.
Yeah. See, the BOD has constituted the Committee of Independent Directors on November 8 for comprehensive evaluation of various options and alternatives, including demerger for restructuring, UGA and related arrangement. The evaluation by the COD is ongoing, with inputs also being taken from certain advisors. We will inform the stock exchange once an option has been finalized and approved by the board of directors, and as is required by the applicable law and regulations. Right? The company is fully cognizant of the need to create shareholders' value, and the board is the COD is also aware of this.
Thank you. Next question is from Mr. Nitin Agarwal. Please unmute yourself, Nitin.
Hi, sir. Thanks for taking my question. So my question is on UGA. A1, if you can tell us what is the global sales of the injectable business this quarter?
Yugandhar.
Yeah, I'll just let me just tell you, like, this UGA is all about not only injectable, it is complete specialty business. It is general injectable, oncology oral solids, and hormonals. And we are like clocking at a range of around 100 to 110 million every quarter. That's the last 3 to 4 quarters performance, and we expect that will go up to double-digit growth next year. Nitin, any other question on that?
Yatinji.
Hello. It's just.
Yes, Nitin.
Hello. Yeah. Secondly, so we are at about a $400 million thereabouts run rate for this year. We've talked about in the past a $650-700 million run rate for the injectable business in 24. I mean, so how do you see this gap or this difference between the? It's a fairly large growth we're talking about next 2 years. How do we see this getting bridged? Any specific geographies? Any specific launches? Any thoughts on where we can get to in a couple of years along this target?
Yeah, I think, starting this year, like we are expecting significant launches happening from the April of FY23. So I expect like that starting from April, like we have scheduled launches of around 10 to 15 products in FY23. That will drive the growth for FY23. And for FY24, also we have significant assets and settlements for launches. So we are pretty confident of 650 to 700 million in FY24.
Thank you, and best of luck.
Thank you. Next question is from Mr. Anubhav Agarwal.
Yeah, hi guys. First question is on the input cost inflation. So if we hear the comment from most of the companies, they've been guiding that the Q4 impact will be more than the Q3. So is that true for Aurobindo as well? Because from the commentary, it seems like you guys trying to say that most of the impact was there in this quarter. Next quarter, it will be okay.
Quarter. That's it. Can I answer? Excuse me. Can I answer the question?
Yeah.
Yeah. You see, Q2 itself, there is a fall is there because of one or two one-time sales are there in US. So we have it looks better. It's not exactly it is reflected at the time in Q2, but this is started Q1 onwards. Q1, 2, 3 it is started because the pricing, as I told you from the beginning, we have 3 types of pricing reductions. One is the oral pricing reduction. Another is the oral price reduction, and the all input material, every input material, either chemicals, intermediates, or the products, and it has come down. And ARV business now only slowly improving. ARV business this quarter, what was the running quarter? Definitely it was better than last quarter. And we have visibility in next 6 to 7 months. May not be at the same level of last year. And that is the ARV, loss of ARV business is the one area. Third area and most important area is input material cost increase and services cost increase. Services means like coal become double, and the freight alone, we will send 370 containers in a month. For a quarter, our freight is increased around 8.5 million in last 2-3 quarters net. So with all these things, we are very hopeful. Either freight or the coal has already come down, but that will be used that after 1 or 2 months, because now we are using the double the cost coals, and because our coal usage is monthly 2.5 million. So all these things we are hoping that the costs will come down after winter Olympics, and ARVs little improve. So that is the reason we are telling in the beginning things. This may be the bottom. In 1 or 2 quarters, we will reach to the improvement stage.
Sir, I am with you. My question was very simple. That did Q3 reflected the bottom, or Q4 will be even worse, and therefore March quarter will reflect the bottom?
I don't think so. Something we feel Q3 is the that's what we feel. That let us see. But we have January month is a little better, and Q3 is the bottom most level. After that, things should have either stable or improve.
That's helpful, sir. And second is on the domestic market. When you talked about reaching about 1,000 crore sales, what kind of capital you're trying to commit here? Even when you're going organic, inorganic, and in this 1,000 crore, target is what? Maybe I missed out. Maybe 3 years you mentioned, or what time frame?
Yes, 3 years from the date of the first launch.
And what kind of capital you committing to reach the 1,000 crore number?
We cannot tell that whether we will buy the company's brands. That's a difficult, but whatever the capital, we are prepared for that.
But typically, the norm in the market, it's about acquisitions typically happen at about 3 to 4 times sales. So are we talking, when we're talking about 1,000 crore number, we're talking about
maybe, yeah.
Okay. Thank you, sir.
Thank you. Next question is from Mr. Tushar Manudhane. Yes, Tushar, go ahead.
Yeah, so just on the US generic piece, while the price erosion would have got subsided, but the pace of launches have also considerably reduced compared to the annual run rates in the previous years. So how do we see the launch pace improving if it is hinged on US FDA inspections?
Yeah, we feel that once US FDA inspections are now things are improving now, and inspections are coming, and approvals also will drastically increase.
Okay, even the injectable for which we are targeting 650, 700, I'm sure, at least for the near term launches would be subject to the inspection and then subsequent approvals, or the product, it's more to do with the product review without inspections.
Yeah, it is the product review without inspection, and most of the filings and the approvals are dependent on just ANDA review, nothing to do with the inspection due, because we have not filed any product in the new lines where inspection is necessary. So from that perspective, FY23 and FY24, I don't see anything which is hinged on inspection per se.
And just broadly, while without maybe not sharing the name of the products, typically, what kind of the product size you are targeting, approximate range, if you could highlight?
No, it is in the range of, I think like it's an open news. There are a lot of products which are actually going off patent starting from May, and you do your research, and we are present in most of those off patent molecules. There's no significant launch on approval molecule. It's mostly off patent, and it's in the range of 100 million to 1 billion.
Understood. Okay. And any update on the implementation of the PLI scheme?
Yeah, we have started the plan. We have started the work. We already spent for 500 crores, and we are very much, we are really excited. This is going to be the good project. That's what, because of selectively we are investing in the API, where we are strengthening the other existing. Nichan Reddy, can you explain?
Yeah, this PLI scheme that we are going ahead with the project for 15,000 tons of penicillin G at Kakinada. We have a good thing is we have extended 1 more year for the manufacturing facility instead of 23. We got extension up to 24 because of the COVID issues. We raised it to government. That is happening. So the already land is acquisition is over. That work is going on. CFE and environmental clearance has come. CFE, CF, all this come. Then now the started for the construction is going on full swing.
And while you highlighted on the API side, there's been improved demand for certain products, but is that like for this particular quarter, or you see this to be sustainable number to go by?
Generally, now the last quarter also a little bit improvement is there. The same thing will continue. Because last 3-4 quarters it is very low. The consumptions are like antibiotics and other things and COVID restrictions. There not much sales is not happened. Now this sales are improving. We have a perfect base is there. We can grow in the further growth.
And just lastly, whether this out of this uptick quarter, how much would have been due to the raw material cost pressure, and maybe how much was more of a volume like?
No, raw material side, we almost 10%, say 8 to 10% as our input raw material cost has gone up. Then solvents and other things already Ram Prasad has explained for the logistics and all the input logistics also gone up. Now that will slowly, we hope that another 1 or 2 quarters it will stabilize.
All right, thank you. Thank you for it.
Thank you. Next question is from Shyam Srinivasan.
Yeah, hi, good morning, and thank you for taking my question. Just first is on the biosimilar and the vaccines business. So if you can give us an update on some of the key molecules that are there, also on the vaccines, what's happening to our COVID candidate?
Yeah, this is Satakarni. So in terms of the biosimilars, as you know, our second oncology biosimilar has been filed with the European Medicines Agency in January 2022. So this is according to the plan. We are having 3 more biosimilars at different stages in phase 3 licensure clinical trials, out of which an oncology biosimilar monoclonal antibody that is currently being evaluated in a large phase 3 efficacy and safety trial will potentially be filed in the next financial year. We are looking at Q3, Q4. We have the last bits of recruitment to happen. So that's progressing well despite the COVID headwinds.
Q4 of this financial year is Satakarni?
Of the next financial year, starting April of 2023. So our development efforts with our second wave of biosimilars are entering into an important stage, I would say, with one product which already advanced in this month as we talk into phase 1 trials in Australia, and another product advancing into clinical trial, early clinical trial, probably in Q1 of the next fiscal. We remain otherwise on track with development of our other biosimilars, both in oncology and immunology segments. So we are reasonably convinced about the progress that we are making with our biosimilars portfolio in both oncology and immunology segments. To address your second question, Shyam.
Dr. Satakarni, let me just interrupt because can I quickly follow up on this, right? So we should assume a 9-month window for both these BP13 and BP14, right? Would that be a starting point? And in terms of market formation, or when there is market formation already, in terms of your launch strategy also?
So essentially what we are looking at is with the regulatory timeframes during the COVID times, we assume about 267 to 270 days, which is roughly 9 months. And the market formation depends on the national phases that you are entering. Anywhere between 2 to 5 months roughly is the time that takes to enter markets, because you have to enter national phases after getting the approval from the centralized procedure. I hope that answers your question.
Yes, thank you.
And with respect to your second question regarding the vaccines business, as you told, we have given an update in November that the Vaccinity project did not move forward because Vaccinity failed to get an approval, emergency approval from the Taiwan FDA. But our bacterial vaccine is currently in the first licensed clinical trial, and we will be able to make more commentary on this subject once we initiate the review of the pivotal data coming out of the trial somewhere in Q3, Q4 of the next fiscal, and once we initiate the regulatory process in India. Our other vaccine programs are at different stages of development. So we are invested in vaccines now. The realization from the COVID scenario is that we have a backbone of capabilities in terms of our GMP know-how, in terms of our presence and marketing outreach, that we wanted to stay invested in other vaccines. So that's building up really well. And we hope in next 2 to 3 years time, we will have some advances made in key vaccine segments.
Very helpful. My last question is on the Auromedic injectable number, I think 63 million, some 6-7% decline. So what is still driving this? Is it still demand, or is there a price erosion angle even in the injectable side?
I think it is both. I think we are averaging around 65 million per quarter for the last 3 quarters, and we expect that it will be in the similar range, 65 to 70. And going forward, I expect that significant launches coming in FY23, like the run rate will significantly improve. Right, it's both. Like we have slight price decreases here and there, and there is also volume increase in some products, so that they get offset with each other for the quarter. So it's a running quarter. Like I'm just saying, because there can be a 2-3 million gap here and there, but in general, it's a stable, pretty good state of business. And starting Q1 of next year, we see significant growth possibilities.
Got it, sir. Thank you and all the best.
Thank you. Next question is from Surajit Pal.
Hi. Thanks for taking my questions. Just one question is that, Mr. Rao last time told us that, antibiotic sales in US could be the precursor of, better cycle for hospital business. Could you throw some light on update on, how that antibiotic sales overall in the US is ramping up?
Who told that? Who is that told from our side? Antibiotics, eh? Even the
see overall antibiotic sales. Pardon?
There is no. Continue then.
Yeah. The antibiotic sales in US is a precursor of overall sector-wise the hospital sales to go up.
Yeah, I remember. No, there is no much now. Things are stabilized. There is no antibiotic. It was normalized. Now things are slowly improving. The new patients in US also is drastically coming down, except deaths. So from next 1 or 2 quarters, things will improve. The antibiotic sale already increased, and other sales also will improve because of this. Because last 2 quarters, the hospitals also are very busy. We are hoping in next 15-20 days, things will be perfectly all right, and things will improve. That's what we feel in US injectables.
Okay, thanks. In domestic market, can you throw some light on which are the segments you could be targeting initially, or is it possible that you might be encashing your R&D projects which you are launching?
We can tell in next quarter, not in this quarter. It is an idea. We have a lot of plans we are designing, and we will come back to you in coming quarter. Coming 1 or 2 quarters, we will have a lot of clarity.
Okay. Thank you and all the best.
Thank you, sir.
Thank you. Next question is from Prakash Agarwal.
Yeah, hi, this is Prakash. Good morning. Am I audible?
Good morning, Prakash. Yeah, perfect.
Yeah. Sir, question is on US FDA. So you mentioned that, it's an ongoing process, which we understand. But tell me something with, they started quite a bit of inspection in October, November, and suddenly in December, January, I think it is again slowed down. What is the current conversation with the FDA for the, for this year's inspection, which are planned already? I mean, are they coming on board, or still desktop inspection is happening, or what is the conversation that is happening?
No. There is we feel in next 2-3 months, it will become normal.
And they would start visiting again?
The physical inspections will happen.
Yeah.
Okay. That you expect to start in next couple of months?
In 2-3 months, at least, in both sides, India as well as America, things are very drastically improving in COVID side. And we hope in 2-3 months, it will be normal way of sides.
Okay. And sir, understood. And correct my understanding, sir. I mean, we've been hearing that, a lot of complex product approvals require, pre-inspection, etc. So there was a participant also saying that, the run rate of approvals have come down, especially the complex one. Is it related to that, or you think that is not required? Inspections are not required for complex products if the plant is approved?
It's not like that, the previous products, latest we filed 180, 90, we have taken care. Previous products all are at least 60, 70 products are tentatively approved, or patent issues and all these things. We are getting, it got stuck either in raw material because of unit 11 or unit 1 or something. Then now the new approvals all are coming. We hope it will come from next month onwards. Is very fast. There is no, there is a less relation with the plant inspections, just because of this type of API issues. We are changing the APIs, and those it got stuck because now it has to approve last 1 year. This is because of the 2 years back filings. That is all stuck in the APIs one. New one, it is a less headache. It is a less problem in that area. We already changed the outside API.
Okay, very helpful. And second question is just clarity. I mean, there are various participants who have asked. So are you saying that both from Q&Q US pricing pressure decline that we have seen, as well as input cost, there is one more quarter of pain and then we start growing? Or you are saying pain is behind us and we will stabilize from Q4 onwards?
I strongly believe pain is behind us. It doesn't mean that it will overnight, it will come down. In next 1 or 2 quarters, it will start going down. I am not expecting any big price increase, either input material or services or in the price point. That's what we expect.
So Q4 is stabilized or it is still under pressure?
May not, definitely. That's what I feel.
May not decline further?
No.
Okay, got it. And so last one, if I may, so we have a long list of complex products across, different segments, complex segments. In the past, we have said 23 is the year where, we will start monetizing the complex injectable, peptide, penems, etc. in a big way. So is it more on the second half side, or it is moving to fiscal 24 given the delays that you talked about across the industry?
Yugandhar?
So
You're talking about injectables?
Yeah, complex injectables.
Yeah,
not the plain
complex
vanilla small one, bigger ones like, 10,
Chemicals are
20.
going on some various.
Yeah, some of these things, obviously, like whatever we said, it is fiscal 23. I think we are still confident that like we will get some of the complex injectables in fiscal 23. Let's see like how it goes. But due to COVID, there are some development delays because some of the injectables are getting developed in US. Then we have to take batches in India because of the travel restrictions and all. Some of the validation batches and all, there is a quarter or 2 delays. But we expect that we will start doing the filings in FY23 and expect some approvals to come from FY24 onwards. But it will be a continuous journey with a quarter or 2 delay.
Okay, perfect. Great. Thank you and all the best, sir.
Thank you.
Thank you. Next question is from Mr. Venkat, requesting you to please introduce your firm name before asking the question. Yes, Mr. Venkat, go ahead. You can unmute yourself. Yeah. Please ask the question. Okay. We'll go to the next one. Next question is from Mr. Anubhav Agarwal.
Yeah, first question is on the PLI. Just wanted to confirm. So when do we start this PLI production? Earlier timeline was April 23. Will it be April 24 now?
Yes, Anubhav. That is actually up to 24 end, we are going to start the productions.
So you were talking FY24 end, is it? Okay,
Yes,
which is April 24th. Understood.
24 March.
1/4/24 is the cutoff date we need to start on.
Understood. And the capex is still at 2,200 crore, or is this changing capex?
Yeah.
Capex is 1,850 crores. One of the 2 projects we dropped 7-ACA and Thiac. So we restricted to our only for penicillin G. We are going ahead with that project.
Penicillin G alone as 200-300 crores capex are increased because of the heavy steel prices where they underestimated the equipment. Otherwise, the land we bought for the future requirements, 400 acres, we are using for penicillin only 120-130 acres. So like that, there is a here and there some 200-300 crores increased capex.
Sorry,
Only
what
for
is,
Pen G.
what is the number you mentioned? 1850 crore, is it?
Around that. Nichan?
Yeah, around that.
And out of this, how much is let's say really let's say on which incentives are applicable from the regulator, right? So one is, I remember you guys were going for higher capacity.
240 into 5.5. It is around 1400.
On 1400 crore incentives are applicable. Any particular reason we dropped the other product?
No, we have some. We asked with the ministry some like 7-ACA and D7-ACA. Because that is a half and half the demand. Somewhat the government because they have to go back to the prime minister level or something, or whatever it may be. So they felt, why can't we do? They are rebid last week.
Okay.
The scheme is only for 7-ACA. In domestic requirement is 50% 7-ACA and 50% almost 50-55% D7-ACA. Without D7-ACA, only 7-ACA is not feasible. We thought that, then we dropped the project.
Yeah,
understood. And sir, just you talked about it, but just asking again, I'm not still clear. The sharp decline that we've seen in the US from Q2 to Q3, when price erosion was not much, what explains this 402 going down to 366 in one quarter?
I'm on mute, sorry. It's a combination of that, because one is the overall reduction is not only attributable to the orals, it is a combination of everything. Plus also there is a significant drop in the direct dispatches from India, where the third party label guys used to pick it up from India, which they are not picked up. That is one thing. And second, within the distribution within US also, there is it's not a very drop in one segment. It is a small drops and about $10 million drop in orals like that. Everywhere it is scattered.
It is only 30 million. Sometime here and there will in one segment more. So it will happen in this difficult time. Something.
See, as a business animal, we are also looking. Overall, we have been trying today. I mean, we know there is going to be a drop in US because of various reasons, and we are focused more on the API so that we are ensuring that we are meeting the top line. Whatever we are aspiring, we have been trying to meet it like that.
Sure. And what about the inventory levels for us in the US for our products? Like, for example,
it is good now, and we are working for another 100 million reduction overall in our working capital to increase the cash balance. My people done a wonderful job, and we have still room for reduction especially in Europe and some areas. And 150 million, we have the room for reduction and increase the cash flow.
No, actually, my question was a little different, sir. My question was that, let's say the problem that you guys mentioned earlier, the industry is facing, that a lot of inventory was accumulated because of erratic supply last year due to COVID, and those products are nearing
I think
expiry.
now that now the accumulation, either they must have destructed or they must have sold. I think it must have already come, because already 1.5 years is over. There is no use of any stock.
But how about that stock for Aurobindo? Are you having stock which is near expiry now? Or is
Yeah, whatever is there, whatever is there, some products like azithromycin, some products we already put provisions. So whatever is there, we sold it. In some products, we requested the distributors, even 6 months also recently. Some products they already bought it. Some products we already put. Swami is not there, my colleague. He knows better. Some we already put provision, whatever is. Now it is coming almost in one more quarter is there, maybe this issue. Afterwards, there won't be excess stock.
Okay, thank you.
Thank you.
Thanks,
Next
Anubhav.
question. Thank you. Next question is from Cinderella.
Thanks for the opportunity. I just wanted to understand our strategy on European market. For quite some time, the market has been subdued for us. So how do we see, plus on the injectable side also, we had plans on our plant for European and ROW market. What is the status on that? And when do we see this growth? Is it because of lower approvals, or what is the cause on the European side? Can you please help us understand?
I'll take the injectable side first. I think after that, Ram Prasad Reddy garu can give the overall view. In terms of the injectables, as you rightly said, we have decided to construct one plant and in Vizag, and it's almost complete, and we'll be starting filings from middle of FY23, and we expect to start commercializing in FY24. So I expect it will be a steady and muted growth in Europe for FY23. From FY24 onwards, it should pick up.
An overall market?
RPR garu, like,
yeah, overall market, see, nowadays injectables, they are going to oral divisions are going to have a distribute for UGA, and that is the one area. And overall, we also really struggling, and we already filed around 70 products, new products from new products means what we developed, and another 180 in the development at various stages. And definitely we are also very deeply studying with the outside consultants also, and how to break to the next level. It goes from 900,000 million to 1,300, 1,500. We are also on that job last 2 quarters, madam.
Okay, and on the US side, we said that there was almost $10 odd million shelf stock adjustment. Was that taken in this quarter, or it is for the 9-month number? Can I have
a 9 months number, madam?
Okay, thank you so much.
Thanks.
All the best.
Thank you. Next question is from Praveen Kumar. Mr. Praveen, please unmute yourself. Okay.
Hello, sir.
Yeah.
Praveen here, sir.
Yes, go ahead.
Yes, sir. XMD talked about that buyback of shares. The board will review about the buyback of shares, sir. Whether it will be, we can expect in the upcoming quarter, sir.
Can you please repeat?
Yeah, the XMD has said that a board will review about the buyback of shares in the upcoming quarters. Whether it will be in the bending, the proposal is still bending.
Subbu, what is it? Can you please tell?
Yeah, there is no proposal before the board, Mr. Praveen.
Okay, sir.
As and when any decision taken, it will be communicated to the stock exchanges, but we don't see it now.
Okay, sir. Okay, sir. Thank you, sir.
Thank you. As there are no further questions, I would like to hand the conference over to Mr. Arvind Bothra for the closing comments.
Possibly we have another 3-4 minutes. We can take 1 or 2 more questions. Let's let the question queue assemble.
Okay.
Okay, Praveen.
Okay, we have a question. So next question is from Mr. Surya Patra.
Yeah, thank you for taking my question. So just on the injectable business front, when we have given a almost kind of doubling growth guidance for let's say over next 2-year period, what share of that would be coming from the US, and currently what is the mix in terms of US and other major market, if you can throw some light on that?
So it is going to be a significant portion is going to be US. Even today, it is 75-25. And I expect in next 2 years as well, it will continue to be 75-25, 75 being US.
Okay. Second question is on the European business. So, in fact, it was always considered that Europe, the profitable progress in the Europe should practically support the overall profitability for Aurobindo. But on the revenue itself, we are stagnating since some time, quarterly run rate wise. So you have just now guided that okay, 24 would be the key growth trend that that would be witnessing. But in terms of the profitable growth trend, so when do you think that okay, the margin profile for the European business will improve and that will start contributing towards the overall improvement of the margin of the Aurobindo as a whole?
As Ramprasad Reddy Garu said, like in the previous question, I think we are still doing what exactly are the growth drivers, both for top line as well as bottom line. And we are yet to come out with clear answers for the Europe business. I think, as you rightly said, we have come to a stage where we feel like we need to think differently to drive this business. And that work is in progress, and we will let you know in next 2 quarters.
Sure, sir. And just last question, if I can, on the foray into the domestic business, what it is when mentioned. So here the thought process would be to replicate all the portfolio that we have created so far for the global market. That would be implemented here as well. And how quickly that India foray can happen, sir? Although you are in discussion mode, but whether this is like current financial year or any timeline on that front, if you can.
This book, have you followed? I lost control. I'm very sorry, sir.
Surya, this is regarding the domestic formulation. That's what you have said. What we have.
Exactly.
Pardon?
Yes, sir. Please continue.
So we have clearly given what is our thought process and where we are. It is the process. The new business strategy is under evolution. Probably we will be able to come out very clearly in the next quarter. In the meantime, what we have said, the aspiration for us is in the 3rd year we should be achieving a turnover of 1,000 crores, and whether it can be organic or inorganic. And we are also have surplus capacity, etc. And we will be able to come out with a very clear strategy. But having said that, we will not wait for the strategy work to complete so that we will start the work after that. We will do the things parallelly in such a manner we will be able to meet our aspirational goal.
Okay. Okay. Just one clarification. So, sir, in the last call you had mentioned about Revlimid that you have already settled that, and you are also likely to be launching the product before or in the first wave itself. So could you throw some light there, sir?
I'm not sure like whether we said it is first wave. We do have a settlement, and we are expected to launch the product in FY24. And beyond that, because it is confidential settlement matters, we cannot say more than that. But yes, we will be launching in FY24.
Sure. Okay. Thank you, sir. Thank you for taking my question.
Thank you. The last question is from Naga Sridhar.
Yeah. Good morning, one and all. I'm Naga Sridhar from Hindu Business Line, Hyderabad. Am I audible?
Oh, thank you. Yeah, perfect.
Yeah, yes, sir. I just would like to know the raw material import scenario from China, sir, in terms of cost-wise and quantity-wise.
Yeah. Chanand also will tell, I also will change. This became over intelligent in recent past.
Yes, sir.
Nichand Reddy, can you tell?
So I was just asking about the raw material import issue from China, sir.
There is no much issue in the raw material import, but the only thing is because of the telling the input price increase, just like that they are increasing the prices. And also there is a internal some issues are there because of the Winter Olympics, controls on the manufacturing. Because of that also shortages are there. So let us see, let this Olympics are over, then we'll see what happens.
Okay, sir. Thank you very much.
Thank you.
Thank you. I would now like to hand the conference over to Mr. Arvind Bothra for the closing comments.
Thank you all for joining us on the call today. If you have any of your questions unanswered, please feel free to keep in touch with the investor relations team. The transcript of this call will be uploaded on our website www.aurobindo.com in due course. Thank you and have a great day.
Thank you. Thank you.
Thank you. On behalf of Aurobindo Pharma Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.